where you profitable yet, or at least to the point where stuff started to click, maybe take a step back and ask yourself, like, why are you not profitable? What are you doing? What can you change? Maybe you're not good at making quick decisions, like I'm not.
What's up, traders? Welcome back to another TFT interview. Today we're joined with our man Quinton. He's from Vegas and he's gotten paid out over 20K. Welcome, Quinton. Thanks for joining me.
Thank you, man. Thank you for having me.
Absolutely. Thanks for joining me. So tell us about your journey. How did you get into trading?
I was driving trucks when I first heard anything remote to trade. My cousin had showed me something with stocks, but I didn't really just hop too much into it at that time because I was driving trucks. This was 2019, by the way. The pandemic ended up happening. Long story short, came home. I seen Forex again, and my brother-in-law, my fiance's brother, he told me about Forex from some girl he knew at work. I looked into it, placed a trade on demo. It went to 10,000. I didn't know what I did. I asked the girl, I was like, okay, is this real? If this was me doing it and it was real money, could that have been mine? She said, yeah. Ever since then, I've been locked in. It was like the summer of 2020, nice. And that's been trading ever since then.
So you got started basically during the pandemic?
Yeah. Yep, basically right at the beginning.
Nice. And did you have anything like similar to trading that you had maybe in the past, something like competitive or?
I would say in the past, it was hard for me to keep a job because that just wasn't my place in life, I would say. I wondered a good amount during my younger years, just trying to figure out what I wanted to do. That's why I kind of gravitated towards driving trucks because it was more freedom as far as like I could lease my own truck, I could be my own operator,
right,
and stuff like that. So when I heard about trading, I liked the freedom that it give you. Like I don't have to answer to anybody basically, because that was my problem too, having jobs. So as far as competitive, I always had a competitive nature, but I haven't really just put it into anything physical, I would say, other than sports when I was younger, but that was like maybe like 1 year in my life, so not really.
So what about when you got started with trading, like did you just jump right into firms or did you start trading their live funds or like?
I started trading live first.
Okay. Yeah.
And for a year and a half, I just wondered, like from strategy to strategy, not really trying to learn, I would say, just trying to make money. That was a big mistake, but I didn't learn about firms until maybe like it was really recently, just last year. Okay. 2022, that's when I was trying to do MFFs and I felt like 11 challenges. In the beginning, it was like just my live funds. I'm driving trucks in 2019. My fiance, she's in this group on Instagram with these girls, and one of the girls in the group they're talking about, it was some type of IML thing where it was like they was trying to recruit. Because that's when I first kind of was like, okay, what is this? But it wasn't until I came home, which was at the end of 2019. Okay, so end of 2019, I come home off the road. 4 months later, 5 months later, that's when I start trading. So the pandemic and stuff is happening. Everybody's like unable to work. Everybody is at home and stuff like that. So that's what I just put my time into. So really, at the beginning of the pandemic is when I started trading. So from the summer of 2020 up until now. And before that, it was truck driving, but that was the end of 2019.
You're not driving trucks anymore?
Yeah, I'm not driving trucks anymore.
Got it.
This is what I've been doing full time.
That's awesome, man. That's awesome. So when you got started, like, how did you begin to, gather like education? Like, did you have a mentor? Like what? Like
everybody else, I watched YouTube videos at first, just trying to get an understanding of what it was exactly. The only courses that I did was about Swaggy C course, another guy named Doyle Exchange. The thing about trading is you can't buy a course and you could, but most people not going to trade like exactly how they trade the trades. In the beginning, my perception of trading was I guess I'm going to learn this and it's going to be 2 months and then after that, I'm going to have it. But it wasn't like that. So in the beginning, I was just I go to Swaggy, but then I wouldn't really continue with him. And then I just was doing my own thing on YouTube for maybe a year. And then I started watching Dole, and he was scalping. And I'm like, okay, let me see what this is. I'm not even really a scalper. I'm more of a swing intraday trader because I hold my trades. I say more of a swing trader. It just depends on what you think. But I think a swing trader to me is like I'm holding at least 2 days. That's my average trade is 2 to 4 days. So to me, that's a swing trade. What I picked up from Dole's strategy, though, is like little nuggets that I implemented. The same thing I did with Swaggy.
Right.
And I just kind of put it together, and then my own understanding of stuff I read from books, or like Trading in the Zone was influential. A lot of books you will read, you might not remember everything from it, but it's gonna be like that one thing that you're gonna remember, or a couple things. And the one thing that Mark Douglas was saying in Trading in the Zone that really stuck with me is basically, if you have an edge that's proven to work, like no matter if you in drawdown, if you stick to it, you're gonna come up out of it eventually. And that stuck with me. And especially when I was back testing and I actually started to see the statistical odds playing out in my favor, that's what gave me a lot of confidence, I'll say, to go into the live markets. Because for a long time, like I say, for a whole year and a half, so from 2020 to, I'd say probably maybe 2 years, from 2020 to 2022, it was just break even, make some money here, but really most of the time I'm losing. I put a lot of money in trading, and I kind of got lucky is most of the time I would just break even. I never really would lose a lot of money. I put 2,000 in, and then maybe I'll take it to 10,000, but then I lose it all. I lose it all. Wow. It'll be sometimes where I put some money in and I blow it too, because I blow my account too. I've done that too many, many times. I put like over into everything to do with trading close to $100,000. That's money I done put in it, but money that I have lost, because like I said, a lot of times I broke even, probably closer to like 40.
Okay.
MFF, before they shut down, I put like, I bought like 11 challenges, lost 10,000 in that. And the point I'm just trying to make is, it don't matter how much money you get, you need the skill basically. It don't matter how much money you got. You can't just throw money into it. You need the skill.
Right.
And it took me a long time to learn that. And it took me a long time to just focus on the skill. And I stopped trading for like 7-8 months. After I felt those 11 challenges, I stopped trading for 7-8 months, and I just locked in on backtesting, strictly backtesting. And I had data for years and years and years, like going back to 2015, 2016 on different pairs, so I could really know that, okay, this works, so I can get the confidence.
So with the backtesting, did you, like, what was your process with that? Did you, like, do you backtest different pairs? Like, what time frames were you using? Like, how did you approach that?
The first thing I had to figure out when backtesting, when I had to put something together. Like I said, I would get little tad bits from Doyle or Swaggy, but it wasn't like it wasn't complete. When I come to the market, the first thing I had to do was figure out the time frames. Like, what time frame should I scalp on? Or like, how long do I want to be in a trade? And I gravitated towards the like 30-minute as far as entries. And then I used the 1 hour to set up structure. So after I got the understanding of market structure, and I was like, okay, this is how I'm gonna trade. Then the backtesting part just came as far as like, okay, I trade a list of confluences. Maybe a breaking structure occurred here. It's reacting to the EMA like this. It's showing me momentum or candlestick patterns. I basically just use those confluences. And then if it's saying the narrative is for it to go up or down, then I just take the trade based off of the confluences. I don't have like the oversight of news or fundamentals and stuff, but it's still pretty much the same, because fundamentals move the markets. But if you can see something happening on a technical level, then the fundamentals is just what's going to make it happen anyway. I found that just seeing consistent probabilities when I was backtesting, like, or just noticing things that I didn't at first because I wasn't journaling. Because backtesting, I mean, it's a form of journaling, but without that information, it was like, what was I doing? I was just coming to the market. I lose this day. I come back the next day, but I'm not really learning why did I lose. So it's like just repeating the same cycle. So backtesting really, really elevated my game, because it just showed me proof of that it works. It showed me that even if I lose 4 trades in a row, 5 trades in a row, because I'm testing for the whole year, not just months. Like, I want to know how was this year, how was that year, how was this year, which each pair, and each pair I can see consistently like this is how many times I win. The odds on each year 55%, 60%. Some pairs do better. And all of this helps me because now I have this information. If I know that I do better on this pair, then maybe I risk a little more on this pair. Like, or stuff that I would see like, okay, at first I would just trade and I would enter off of 3 confluences, which would be a breaker structure, price respecting the EMA, price respecting the key level in some way. And that would be enough for me to enter, and the entry would be on the breaker structure. The more I backtested, I started to see that, okay, maybe I should wait for momentum too. It also matters how price break structure. Is it breaking structure choppy? Like, it's a lot of stuff that I only started to see because I was backtesting. Backtesting is gonna give you basically the confidence in your strategy. Go live. But people need to understand too, like, live is a whole different beast in itself because you can be backtesting and that stuff is happening like in a minute, especially if you depending on how fast you got it replaying. So there's no emotions involved in it. When I started live testing, I started seeing things like, okay, why do I get out of this trade so quick? Like recently, I have a YouTube channel and it's like I'm documenting my journey. And on one of those videos, I made a mistake and I was explaining in the video, I was basically saying like, okay, it was a trade that I got in original position and then I scaled in. And the scaled in position hit the stop loss. And I closed both of the trades. And I came back later on the day just to see, it still went in my favor. I didn't over leverage. I didn't get mad and get back in or try to force nothing. I just took note and I was like, okay, maybe just because my scale-in trade hit stop loss don't mean that I have to take both of them out. But it was even deeper than that because then I asked myself, why am I getting out? Why did I get out? And I figured out that to some level it was still fear because when I got out of the trade, me cutting both of the trades was basically me just wanting to be done or be done with the anxiety of being in the trade, having to watch it. Like, I just wanted to be done with that. If the scale-in would hit, then I would take both of them out, but it didn't necessarily make sense for me to take the original trade off. You get what I'm saying?
Yeah,
but it's stuff like that that's insightful that you only can learn through backtesting or live testing.
Right.
That's what, like, as a whole, because you say backtesting, how did it help me? It just gave me the foundation, the proof, basically. Right. I have something. And I feel like trading is mostly just what you think. So if you have confidence, it's going to be easier to handle those fluctuations, especially if you have a narrative, because now it's to the point, price can come down, but I know I literally have a narrative. I'm like, okay, price could be going down temporarily. It's only selling to go up. It's only selling to go to this area to go up. Or why did price shoot up like this? To trick people. They're trying to trick people to get in for a buy just to stop them out. It's like, it's more than confluences too, because you can't just enter off 1, 2, 3. That's the mechanical part, but the way I trade is more intuition based too, because I'm not just entering just because 3 confluences happen or 4 confluences happen. It's a whole narrative behind it because a candlestick pattern could happen, but it might not make sense where it's placed. It's just a lot that go into it, and it just really comes from being in the markets, like I say, back testing so you can know your strategy in and out. You have to understand, and if you don't understand your strategy, you're not going to be profitable.
Do you like set your trade in sort of set and forget type of strategy, or are you constantly checking it? Do you have like alarms set? Like what does that look like?
I set alarms. Most of the time I'm up every morning like 4 o'clock. This is just how I like to start my day.
Okay.
So between the hours of 4 to I say like 3, that's when I'm most attentive to the charts. After then, I still could be checking it, but even when I'm at the charts, I'm not just necessarily watching the actual trade. I could be making a video, planning something, or maybe I'm back testing. I'm back testing as much now because I've back tested so much that it's like I know it works. And now I'm just more so live market journaling. But that's normally how my day goes. I don't really watch the trade. I feel like it's just gonna make you more anxious, and it's gonna make you see things that's not really there as well, especially if you don't have the awareness to see these things while they're happening, because it's been times that I be at the charts and I look at a trade and I might come up with a narrative. Oh, he could do this and do this. And my emotions start to you can just tell like you start to get more panicky.
Right.
And it's like there's no need to do it. And if you could just be aware enough to be like, you doing this to yourself, that's that self-sabotage that you got to be on top of, because that's what'll mess you up in trading. Like that last payout, I was in drawdown on the $400,000 account. It was 300. I was like down to 381,000. And I think that's like around 4% or 5. But I wasn't worried about it because I knew, I'm like, okay, when I do take a winning trade, I'm scaling in. When I do take a winning trade, also, I'm going for 2-to-1s, bare minimum most of the time. And on top of me scaling in, because I also trail my stop loss too. I only scale in as I'm trailing my stop loss. So as I'm trailing, I'm scaling in so it can make sense to add on more risk and whatnot. If I lose, cool. I lost 4,000, around maybe a little under, maybe a little over. But when I do win, it's going to be like 10, 11, 12.
Right.
And that's what basically happened. Was down 381. I came back to like 192. I was in a trade and it got all the way up to 97, but then end up the scaling trade ended up going against me. But then I held the original based off what I learned the last time.
Right.
And that ended up paying off because that's how I got the payout basically. And that's the thing I'm saying, like learning, like that was literally just this month. I'm still learning because I only been trading 3.5 years, 3 years, 4 months now.
It's like going to college.
Yeah, basically. And that's what you got to think of it as. You can't come to trade and feel like it's supposed to be different than something else in life, where you have to basically essentially learn the skill. I don't understand why people come to trading like that. Like if you're going to go to college, you're going to contribute for 8 years for whatever curriculum you're going for, whatever are the criteria or requirements that's needed for you to do that, you're going to do that. But when it comes to trade, people expect it to be fast. And it's like, this is not realistic. To me, I don't care how long it takes. Like some people, maybe they can't get trading. This, to be fair, maybe some people can't. But I don't think it's like it's so hard. I think it's just most people just not consistent. Like, and they don't stay consistent long enough for them to see the fruits of their labor, basically. So trading is not hard to me. I mean, it is hard. I'm not going to just say it's not hard, but it don't get easier as far as coming to the battlefield preparing, but it does get easier to spot things. It does get easier to control your emotions. It gets easier. And at a point, you're going to get to mastery and you're going to figure out like, okay, all I had, like the thing that got me here was just, all I had to do was keep going. It was just consistency. And you will look at other people who they feel some type of way because this guy trading and he making money, so they think it's a scam or it don't work and whatever. But it's like you focusing on the wrong thing in the first place. You're focusing on all the outside noise when, like I said, I locked in for 7 months just backtesting and not trying to make no money. You got to be locked into the journey because trading really is a journey. And it's unlike any other to me because it's literally going to grow you up in certain ways. And it's going to start to seep into the other areas of your life. Because you're going to learn trading, you have to have discipline. I don't care what nobody say. You have to have the discipline because if you can't stick to whatever your rules are, whatever your entry criteria, you will not be profitable. So when you become so disciplined with trading, it just starts to seep into other things in life. Like I recently, I started going to the gym more now because it just keeps me with that momentum as well too. Like it just keep me feeling like I'm progressing towards something, even outside of trading. That's a big part of it. Like it's like certain people in life, they have certain characteristics. And I feel like if you have those characteristics, then other stuff is just a byproduct. Like money is a byproduct of certain characteristics. That's why when you see out of shape person, you can almost assume that they lazy. You're like, okay, well, he might not be disciplined. But if you see a person who fit, like it's crazy. You see a rich person or a person who has money, success, it also shows in other areas of their life they have a good diet. It's like they disciplined. How did they get the money? Based off discipline. Because even when a person hit the lotto, they have discipline, it's just going to go all the way. So it's characteristics that you need to have to be a profitable trader. And discipline, that's definitely one of them. That's one of them.
What's your best and worst trade as far as maybe, I don't know, even if it's before prop firms or with prop firms, what's the most memorable at least?
I took 2,000 to 10,000 in a week and I was over leveraging. So I didn't know how to trade anyway. I got lucky essentially. and then take what the market had given me. I knew enough to be like, it looked like it could go down. And I basically made money off of that. And I just kept on over leveraging. Friday comes around, I'm up 9,000, but then I had a trade that was down like almost 2,000. Instead of just closing that trade, instead of closing it out, taking my profits, I say, no, I'm holding it. Then Monday come, wipes me out because it does a gap that 2,000 turns to 4,000. And then I just let it go down to like 7 to the point where it's like, I now got less on right at what I just put in. That was the worst trade. To me, my best trade, I think I say the one that I just recently had. Even though I didn't get a lot of that as far as profit, it was like $16,000 setup.
Okay.
Most of that was used to get me out of drawdown, but it still just showed me that I know what I'm doing because I was down, like I said, 5%, 4%. And that just further go to show what Mark Douglas was saying. If you stick to your edge, and if it's proven to work, then you're going to come out of drawdown. Sometimes you might have to do stuff like, if you are in a losing streak, then adjust your risk. Start the risk a little less. I risk 1% bare minimum on most of my trades. I know some people say it's not good, but it's working out for me. It's around 1%. Like sometimes it could be a little under, it could be like 0.80 or it could be like 1.15. But I risk around 1%. If I start to lose more and I'm down like 4%, then I start to risk a little less. Maybe I'm start to risk 0.50 to 0.25%.
Right.
It's a methodology to how I do it, but that would be the best one. That would be the best trade setup. This last one that I previously had for sure.
Okay. Are you able to share your screen? Do you think you'd be able to show us like maybe that setup that you took for that one and kind of how it looks like?
I was basically using this zone as a key level. I don't say supply or demand because I know what supply and demand is, but I'm trying to make it simple. So I just call them key levels. So I see price, it comes down with momentum. It breaks this previous low that was made. And this low is important to me because it reversed enough a good ways away from this point. So this lets me know that when prices come down like this and it reverses up, minor highs, this is what this is, minor highs.
Right.
That lets me know that this area is a key level. So price comes back through, it breaks through with momentum, and then it shows me again right here because what is it doing? Not wanting to go above. It just showed me this key level. So I looked at that. I come over here, I'm like, okay, that's basically what price is. If you understand market structure, that's all I'm doing. I'm looking at market structure and I'm using confluences. Like this would be the retest. And you see it does this wick. This is basically a retest from this zone. When it's coming down and it makes these lows right here, to me, this right here is a key level because it's a lot of consolidation happening in this area. And once price breaks down through that level, it just lets me know, okay, it's ready to continue the trend.
Right.
Look at these levels over here. Key levels, lows or highs.
Okay.
And the key level doesn't necessarily have to be a peak high or a peak low. It could be levels like this that price just made on the way, right? It's only one candlestick, but if you look closely, I marked this area up. Why did this candlestick push so heavily off of this area? Because this is a key level, and if you look even closer, you can look at the wicks and you notice price is not wanting to get past. Price comes down, it closes right here. Opens, comes up. At some point, it was down here. Doesn't want to go down yet. Cool, fine. Comes up here. It's not going past the EMA. That's another one of my confluences. How's price reacting to the EMA? If I'm going for a buyer position, then is it above the EMA? Is it retesting out the EMA to go up? If I'm in a seller's position, is it respecting the EMA as far as like keeping it going down? If it's selling off, then I basically use the EMA as a ceiling. So price shouldn't break above the EMA. You see how it's coming down right here?
Yeah.
And it never really breaks it. And it can break above it, but it doesn't need to break above and stay above it for long. It needs to come right back within it. Like, okay, it's coming down. This respects the EMA, right? You see this large smart money engulf candlestick.
Yep.
It's basically respecting the EMA. It's continuing down. And not only is it respecting the EMA, to me, if we go down to the lower time frame, because this little white candlestick that reversed up is some type of resistance. Any area where price is doing one thing and then it starts to do the opposite, that's a key level. It don't have to be a peak high. It don't have to be a peak low. because if you go to the lower time frame, it's always going to be some type of structure.
And is that the 9 EMA?
I'm using 13. Okay, 13.
13. Okay.
Yeah.
Got it.
The first entry is on the 30 minute.
Okay.
Because the higher the time frame to me, the more solid that move is. Like if that candlestick prints going down on a 1 hour versus a 5 minute, the 1 hour mean more to me.
Yeah.
Because the lower time frame just make up the higher time frame. My first entry is on the 30 minute, but after price starts to move in my favor, I might scale down on the lower time frame and continue going in that overall position, like maybe on the 15 or the 5 minute. I don't never be on the 1 minute. The lowest I will go is the 5 minute, but that's sometimes, not often. But this is this point that we was just looking at on the 1 hour. Basically, price comes down, comes up. It just lets me know it doesn't want to get past this area.
Right.
And the key level is basically an in general area. It doesn't have to be perfect like how these wicks coming outside the box. It's just like in general, is price respecting this area? Yes, it comes up a little bit, but it continues to have trouble getting any higher than that, right? You even see this wick, even after this candlestick broke out of this zone, this candlestick just shot right back down abruptly. And it's still respecting the EMA because it came above, but now it's back below. It comes above, but look at the wick. The wick shoots all the way up here.
Yeah.
But then it closes down here. So it's respecting the EMA. And then at this point, if I go to the 1 hour, same thing. Price comes down, respects it. So this whole little area to me, that's a key level. That's confluence 1. Price above below the EMA, that's confluence 2. Starting from the 4 hour, looking at this area right here. First thing I'm looking at, I want to see what has price been doing. Price has been steadily going down. That lets me know the trend is at the current moment it's going down. Okay. What is price doing in this area? It's fighting to get up. All I'm doing is marking up levels, and then I just want to see how price is going to react to them. So on the 4 hour, I'm marking up this level. It's also, you can consider this a peak as well because it dipped right here. Even though it's a little dip, it's still a peak. And if you look again, you can see price respecting those confluences like I was telling you. Look at it, stand below the EMA. Stand below the EMA, we got momentum selling off. Okay, so at this point, price is breaking structure right here. So I'm going to go down to the lower time frame and I'm going to see, we could possibly get in this for a buy, but I'm going to go down to the lower time frame and we'll try to scalp it up. So right now we got price breaking above. And like I say, all I'm doing is marking up key levels and I want to see how price is going to respect them. The narrative is it's going to go up. So we looking for a buy position. It could do something in this area, come up, or it could do something in this area. We basically waiting for the reaction. And after it starts to break so many key levels heading down, that's when we know that it's possibly turning into a seller's position, going down to the 30 minute. So now in this in general area, it's showing me like it wants to respect it. The conservative entry would be right here to wait for it to come back up here and break structure. That would be the conservative entry, the more safer entry. The aggressive entry would be me seeing some type of momentum in here. Let's go down to the 15-minute action and some type of candlestick patterns. If it starts to do stuff like this, where it's like it don't want to buy up, if that was the narrative that I had, then I just go to the next key level. Okay, it didn't want to respect this one. Is it going to respect this one? Okay, so this one is no longer valid for the retest for a buy up. Okay, I go down to the 30-minute. How does it respect this level? But at the point that it break this one, we get in for a sale. And it could be a loser or a winner, but this is how I trade. We got gaps right here that can get filled. This is just stuff I'm noticing as to why price could come back up. Right now, it's in a range, basically. I'm waiting for it to break so I can get the overall, like, it's going to be a good little distance. It might take a while, but I know what the market's doing. It's ranging right now. I'm waiting for the break of structure right here. Now that it's going up, we enter. We enter because we was preparing for it to be a sale. You have to basically jump on opposite sides of scenarios. It could buy, it could sell, it could buy. I know it's in a range. We still waiting for it to break. It's coming back above. If we can get it to break right here with momentum, then I will enter. But if it starts to hit this level again and sell off, then we just gonna get in for a quick scalp. This area right here get disrespected. And if that area gets disrespected, okay, boom, this could be a quick scalp.
Right. So you keep your stops at like the relative high.
Yeah, the relative high. Sometimes I go a little higher, and we might not get all of this. Right. It still technically could turn around in this area too. I'm just marking up the areas on where I'm expecting to see some type of fight back as far as like price trying to go back up. And when price makes structure like this, see how it comes up? It's like heavy weak rejection.
Right.
This lets me know this is making structure. So this is usually where I would scale down and enter again. But at this point, I'm waiting for a price to come into this area before I scale down.
And at some point, do you put your stops to break even, or?
Yep. At this point right here that is down, this would be basically a break even. And on this candlestick, on the 15 minute, okay, so we was on the 30 minute, but you see it comes down, it breaks this area. Remember I said in this area, this is where we would enter on the scaling trade. Most of the time, I wait for the candlestick close, unless price is a good distance and I already know, okay, what it's looking like it's selling off already.
But with that first trade that you entered, you wouldn't take like profit at some point, or do you wait till like you get your full TP? Like, how does that work with you?
Well, most of the time, if I'm in a trade, I try not to take the profit because this right here was, to me, this is just a scalp. To me, on the lower time frame, yes, it is a good amount of profit, but the way I trade, because like as far as like holding for days and it's continuing in that area for a long time, then I would take profits. But in this situation, it just didn't make sense because to me, I'm cool with the break even, and it could have rejected this area, come down, and I would have just entered again.
And then with your risk, like how many do you risk in the same amount of pips every time?
I try to do percentage based. So with the 400,000 account, I just try to risk around 4,000 every time.
How do you calculate that?
Well, just for simplicity reasons, this say 160.
Yeah.
If I was to just pull it right here, going for at least a 1 or 2, I'm looking at this right here and it's 250. So basically, I just multiply that until it gets to 4,000. And that's how I get my lot size.
Got it.
Right. So 10 times 250 is like 2,500. Right. So usually my stop losses are like 400, 500. So I'm not really all the time. The highest I would go is like 25 lot, but that's like when I'm scalping something like this. I don't really usually go too high as far as my lot size. They might be high to some people, but to me, whatever matches up with the 1%. So
got it.
If my stop loss says 300, whatever multiplies into 4,000.
Got it.
If you say it's 500, whatever multiplies to 4,000.
The pips are maybe around 40 pips that you're risking generally?
Yeah, I would say 40 to 70 on average.
Oh, wow. Okay. It's pretty big. Stop. But that makes sense for a swing trader.
Yeah, and that's what I'm saying. So like this, I wouldn't have took no money out. That's why I want to get one where we can, so y'all can see where I get a winning trade. But it's ranging right now. And I noticed too through backtesting that I prefer to sell. I'm more of a seller.
Okay.
Okay, so it's coming back into this area. See, at this point, I'm just gonna wait for a breakout because it's just ranging.
Right.
It's just ranging. Okay, it breaks out 30 minutes.
Like let's say in that scenario, would you have like an alarm set so as soon as it breaks out of that box, like you'll know? Like what, you know what I mean? Like
to be honest,
back testing right now, so it's like different, but
yeah, I do have alerts set at the levels where price will get to. That doesn't necessarily mean I would enter as soon as price gets in that area.
Sure.
Now I want to see what happens because with this, it can make you feel like you missed out. But like I said, it's a gap right here. And a lot of times when price shoots up, it is going to come back. It's going to come back and it might not come back and fill this in, but it's going to give you a chance as far as like a pullback where it's going to start to make some type of structure. I don't really like the in-tone stuff like this. That's why I go to the 5 minute. I try to see, okay, if this is this much, I know there's news.
Okay.
If it's this big, so then I'm going down to the 15 minute and you see how it's still big. So I know for sure that's probably news. But on the 15 minute, it's making some type of structure as far as like it slowed down.
Yeah.
Okay. At this point, it could be this area that price could come back into and then go up, or price could come and fill in this gap on the 30 minute and then go up. So basically, I'm just waiting. And like I said, they could have been, remember when I answered right here, I said they could be trying to trick me, false breakout. Okay, cool, fine. I cut my losses on that one. So that means I minimized my risk, so I didn't lose the full 4,000.
Right.
Looking at this one, now we got it selling off. We got a breaking structure right here. Okay, it could be finna sell down now. And you're going to see, once I do get that winning trade, you're going to see I make back everything we just lost. Okay, so price comes up, makes key level right here, comes down, breaks minor structure right here, breaks minor structure again. Okay, so let's see if we can get a retest. Now I'm looking to the downside. Okay, structures being made. respecting the EMA. Can we get, is you gonna respect this area? This area we looking at, even though it's all still within the hour key area. I'm just marking up key levels basically.
Yeah,
See how
no,
this
totally.
respected that? Yeah, but it's still within the same hour key level. I had another position right here.
Okay, so you're minimizing the risk on the first one.
Yeah, okay, yeah. So now we losing. This is literally $1,300. That's what they would be if this was a real trade. Okay, this one is almost around 4,000, so it's a little over 1%. And this might make sense too because I know certain months I do better. Okay, now at this point, this stop loss is non-existent. Okay, so we breaking even bare minimum on this one. This was 3,000. We pull this down to like right there.
Got
I'm risking 2,500. Let me see. I go like right here. I'm not going to enter again yet, but I am thinking about a third position. Okay, see, okay, it's at the bottom. This is where I would start to be like, okay, I'm really paying attention to where I'm going to get out of this trade if it goes against me, because at this point it could just respect this and come against us. So
I mean, at this point, you could already be maybe like in profit from even the last two losses.
Yeah, for sure. And that's why at this point, this is what we would take profit at on this one, and then this one would be a break even. So we losing nothing at this point. All right, let's go. If I can get a break below here, then we enter for the third time. Okay, candlestick come down here within the first 2 minutes, but then by the end of it, it's all the way up here. So that's important to me too. How close is it to closing as far as the time? Okay, get right there. Let's see. It might not make sense no more because I need at least a 1-to-1 stop loss.
So you might even stack 3 positions on like in a.
Yeah, the thing about it, when it started to get this close, I'd be like, am I being greedy? Because technically, I'm not gonna lose nothing at this point. So I could put in just enough. Whereas, like, even if this goes against me, I still be in profit. So, broke structure at this point, I'm gonna trail it even further. This yellow line just represent where we're gonna get out. So now we making money on this one and this one. And this is probably like $1,500 I'm risking. So it's nothing compared to what we making on these. Even if it goes against us, right? Okay, so and boom, that's basically it. So we made back everything that we just lost, and you see the amount of distance it went. And this is why I say I might be in trades, because this happened on Friday the 14th and it's over on Tuesday the 18th. That's basically how I trade. I just trade using confluences, breaker structures, like market structure. I have a list of 12 confluences, but the main ones would be momentum, candlestick patterns, some type of respect from a key level, highest price, reacting to the EMA, and breaker structures if I didn't say that one. But those gonna be the main ones. Confluences can be anything. Sometimes I use the field, but it's to the point now where, because the field is just essentially market structure. You see which levels our price more likely to react to. I can see that with my eyes now at this point. So I don't really use a bunch of indicators. The EMA is the only one I use. Most of it is just market structure and what is the market telling me.
Do you strictly trade Euro USD?
Sometimes I trade GU, I trade UJ, EJ. I'm starting to backtest on US 30. That's a beast. I'm backtesting on that one. Sometime next year, I might start a live trade on that beast.
Okay.
For now, I trade EU, GU mainly, and sometimes I might do UJ and EJ, or even GJ. So like 5 pairs I rotate. Yeah.
That's great, bro. I love the strategy that you're showing me because, obviously, at least in this situation, it worked. You know what I mean?
Yeah. I can show you this, actually. This is backtesting proof.
Yeah.
Let's go to 2021 this is GU.
Okay.
You see the win percentage 6.34%, the wins, the losses. So these is how many trades I'm taking in a year. Not really all the time that many. I could take more than this, but at this point I was just like, I'm trying to take 5 trades a month so I can get the backtesting over with. But you see in January, I want you to pay attention to the losses and how many losses occur in a row. So you got 1, 2, 3. And then you got 1, 2. This is the month of January. January are bad. Sometimes it could be a break-even month. Sometimes it could be a month where I make a little money, but I know stuff like this through backtesting. So that's another thing that plays with my psychology. I'm knowing what to expect, right? So I don't want you to think that these are just back-to-back setups. These are like stacking trades like how I just showed you.
Mm-hmm.
So it's not like them just winning this many times back-to-back, but a lot of these are stacked, especially if you look in here, you see it say 1 or 2. Then right after that is a 1-to-1. If you look at the times, 4 or 5, 407, they real close to each other. I'm stacking trades. But this is from March to June, literally, was just winning months basically.
Right.
And you see right here, 1, 2, 3. How many times do you see more than 4 losses occur? 1, 2, 3.
Right.
That's 2021. This is 2020. You look at this year, same thing. Where do you see more than 4 losses? This just lets me know, okay, I also know how many losses I can expect to take on average. Now, of course, basically it could be some discrepancy between the back testing and the live market, but that's all going to be based off of the psychology. The goal is live testing to try to get as close to your average as possible. And if you're not getting close to that, then you know it's something that you're doing, because I know the strategy works from back testing. This is 2020. I can go down. 2019, 63%. I go to EU. This 2020, 62%. 2019, 2022, I started trying to do scalping variant. But this is how I basically back test. And I basically got all the data. This is an EU. I just started on this one. But UJ, I got a bunch of data on this one. And this I do like 50% sometimes. This is 60%.
Is this something that you created yourself, or did you get this?
Yeah, this is basically just a Microsoft spreadsheet. I got the concept off a YouTube video, but the exact stuff I look for, that's all like what I created, like TP1, 2 intraday. How many confluences did I enter on? What was the risk to reward? What was the risk to reward? How many was the stop loss? How many pips was the take profit? Like, I have everything. So it just gives me confidence.
Yeah.
So it's like if I am in the live market and something's like not going as planned, then I just know maybe it's just a losing period. And like I say as well, I know December is not really a good month. I just stopped back testing in December. You see right here, December I stopped back testing. Come right here, I got like 2 trades in December, because I just know December is a losing month. But this year it's actually moving. I made some money this year, which is a first. But basically, yeah, that's it.
Someone in my position, someone that's maybe a scalper or intraday, and they're looking to transition over to like more of a swing trading, what kind of insights do you have on, transitioning over and being more patient? Because, obviously you're going to have to be holding that thing for longer, like, maybe some tips about that.
First thing I want to say is I gravitated towards swing trading because I feel like trading is heavily based on what type of trading resonates with you. But the trading has to match your personality. So it's going to be harder if it doesn't match your personality. If you're more of a fast-paced person, you think like quicker on your feet.
Yeah.
Scalping probably is the best you would be trading with. Like, you probably trade the best with a scalping strategy.
Right.
But as far as tips for going into a swing strategy, if you're trying, I would say you just understand that it's going to be, there are going to be fluctuations. So if you are a scalper, don't even just try to come to the market with the methodology of how you scalp now and try to apply it to swing trading. Don't do that. First, go to back testing.
Okay.
See how the way you see the market works as far as like applying that to a swing trading. Okay. And once you start to see some type of consistency, because the thing is, I'll be swing trading and I know when the day in, I know when people are getting out the market, because if it's just dropping, I could take partials right there, because that could be the end of the day. The money is getting out of the market for the day and it can go back up against me and all of that. But I say just having a broader understanding of the full picture too will help you if you plan on swing trading. From people that I watch that do scalp, is more like they out by this time during the day.
Right.
And that's because momentum started to slow up, but money is not in the market. If you go swing trade, understand that it's going to slow down and it could come back up against you the next day a good bit and take a lot of that profit that you might have made that first day. You could be in profit $1,000 the first day and be in drawdown of $1,500 the second day, but then by the third day, you could be in profit $4,000. It's like the fluctuations. You have to understand that it's going to fluctuate. And I feel like that's the biggest thing, just understanding that it's going to fluctuate and having the insight from back testing to understand what's going on, because if you don't understand it, you're not going to be able to hold. Like, another thing that's dependent if you're holding it long is fundamentals and stuff. Like, sometimes I see through news. I try not to enter a trade at news, but if I'm already in a trade and news come out, then it is what it is. Because sometimes that helped me too. It be times when it gets me, but if the trade is already a good amount in my favor and news gonna come out the next day, I mean, then I'm just assuming that's what's gonna push it in my favor, especially if it's matching up. Now, if it's some news just gonna go against me, I just also have a narrative too. Okay, if it starts shooting up against me, what is it doing? Are they trying to get buyers in the market thinking it's gonna go up just to go back down?
Right.
And then it's gonna go up. I feel like you just have more of a broad picture versus just focusing on like that day.
Okay.
Because if you are gonna be swinging, you're gonna be in it for a bunch of days, and you just need to understand, like I say, fluctuations will occur. It's all up to you as well. Because if you are a scalper and you want to take profits, like you asked me at one point during that video, you probably was thinking like, why you ain't take no profit? But it's all in how you think, like how you see the market. Because another person, they might have like, okay, I'm gonna take partials right here where I didn't. That might have worked for them, their understanding, and it might have worked for their psychology. You just really need to have understanding of you. You can't really just, I would say, just hop into a certain way of trading first, like unless you understand yourself. And if you are going to like go from scalping to swinging, then I feel like you should have already understood scalping, already have mastered it, because it's going to kind of make it more confusing too, because those are two different ways of trading. And what might work scalping, it might not work swing trading. Everything might not go over. Like the stuff that work, maybe everything that you use for scalping, some of it could work for swing trading, but not all of it. So,
well, I appreciate that. Yeah, it sounds like, you know, you guys, it's like really a personal journey, right? And so what Quinton is saying is like backtesting is going to be your best friend in this journey, because you need to understand what you're trying to do in the markets. And in order to do that, you need to see what past data was telling you. And so you can have that confidence like he was mentioned in the beginning. So Quinton, is there any other like last tips or anything that you'd like to share with the audience before you go?
If you trade and you haven't gotten to the point where you're profitable yet, or at least to the point where stuff started to click, maybe take a step back and ask yourself, like, why are you not profitable? What are you doing? What can you change? Maybe you're not good at making quick decisions. Like I'm not. I'm more slow. So that just fit better with me because it was more predictable. It was like with scalping, up, down, up, down, up, down. With swing, it's just, okay, it's coming down steadily, it can go up. It's more predictable and it matched my personality. So I feel like finding the strategy that basically just resonates with you. Don't try to force it, because if you're forcing it, then it's not going to work. It got to be a flow state. And that's the thing about trading. It's so many different ways to trade and so many different tools and stuff you can use to see the market different ways. You just have to get into them with yourself. Find those things that help your edge, improve on them by back testing so you can get the confidence and the understanding, and go to the live market, get the live market experience as far as like how you feel emotional. That's basically what you're just going to be doing, constantly working on your psychology and your technicals, just constantly refining, because you don't have to necessarily switch strategies either, because I know a lot of people do that. Just figure out what don't work, what you can fix, take away what's not really helping, add and refine, because that's what I did. Like I said, instead of taking both of my trades just because the scaling trade went against me, I just refined it. I'm like, okay, hey, maybe it don't make sense because the original trade is not, it doesn't make sense for me to take both of them. And that's just refining and seeing the stuff that don't work, seeing the stuff that's keeping me back from being profitable. Trading really is a journey, and it's a journey of awareness, because you got to have awareness of self. A lot of people, they come to the market, and we come from a world where we blame everybody else, like, for why something didn't go the right way or why we couldn't do this. But in trading, it's literally just going to be you versus you. And if you, like I say, if you're not profitable, take a deep look at yourself and yourself, because it's you versus you in this market. That'll be my closing remarks. And also, don't put so much pressure on trading like you got to make it in this amount of time. Don't put so much pressure, because that is going to affect your emotions. Just don't get too attached. That's what I say too. I'm not attached to the trades. When I'm back testing, when I was showing you, I'm like, okay, cool, I lost. That's how I try to be when I'm live trading as well. Of course I lose and I feel a type of way, but I understand that trading don't got nothing to do with how you feel. It's all statistical data, mechanisms. Like, you have to have a mechanical way of trading. You have to have a set way. 1, 2, 3 happening, I'm entering. If you don't have that, you don't have a strategy. And if you don't have a strategy, you don't need to be on the charts.
I love that, bro. Thank you for sharing that. That's awesome. Where can people find you? Is like, what's your Instagram?
My Instagram is at QN Profit. No underscores or anything, just QN Profit.
Like I said, it's a personal journey. So figure out what works for you and stick with your plan. Like you have a strategy, stick with it for a while. Don't just jump around and hop around to different strategies. Quinton, it's been a pleasure. I think that the insights that you shared are going to be beneficial for our audience. But that'll be it for this time.
Thank you for having me, man.
Absolutely. That's it, everybody. Appreciate you guys tuning in. And until next time, see you then. Peace.
All right.